right, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Let's go ahead and get this party started. Lee wrote right in, so you don't think we're just going to bounce in the 58.25 to 61-ish channel? I don't know what. Oh no, she was. Oh no, she was asking Polly something. No, she asked. Oh wow, I didn't know you and Blake actually live near each other. I guess you were talking about Polly and I. No, Polly lives in San Antonio, Texas. I live in Phoenix, Arizona. So we don't. We live, good 1,500 miles away from each other. Maybe even further than that. Yeah, probably about 1,500 miles away from each other. So, something to that, somewhere like that. So no, we don't live anywhere near each other. And one other thing before we start, Sean wrote in. He goes, "It looks like a bear flag on copper on the 4 hour breaking, and it does. Matter of fact, God, this stupid copper. This is um, David says far enough away. Then Blake, yes, pretty far away. So this is a flag pattern on copper. You're right, Sean. It is. And if you're long the Aussie, please take a take a really good look at this chart if you are, because the Aussie dollar, guys, I mean, it looks really weak. I mean, and look, you got a flag pattern here too, right? Shoot, man. I mean, the Aussie looks like it's going to break down. If the Aussie cracks that support today, I'm shorting it. Let's actually, you know what? I usually don't tweet during this time of the day, but I am going to tweet this because these both are really important charts, and I'm not going to overlay them. But Sean, I want to say great observation first of all. Okay, so stand by. Thank you very much. Okay. Okay, give me a second to do this, guys. Shoot, I gotta do one last thing too. Hat tip, Sean B. There you go. They're very, very important looking charts. So thanks, Sean, for bringing those to my attention. Appreciate that. Okay, let's go into our morning analysis, shall we? Okay. All right, so let's start with the euro dollar. Okay. So here's the euro dollar, and the euro dollar, as you guys know, this is flagging, and I shorted a little bit at not. I wasn't awake when this happened when we rallied all the way to the 102. Or excuse me, 112.07. But but the 112 levels, we wrote that down as resistance yesterday. Do you guys recall? That's what our bias chart, we wrote it down. And I mean, when I woke up, I was looking at it at the 90, it was sitting at 91, 92, and I'm like, I'm not going to do anything with it. But then I started thinking about it, I'm like, man, that is still in its bear flag pattern. And there's a 38% retracement right here, and that's previous support. And yeah, that thing might roll over. So I think as long as we're below 112.15, we got to keep the bearish potential uh, in play. Okay, we are in a range environment. Okay, where's support? Support's going to be. I got hiccups this morning. Don't know why. Do not know why. So support. Let's just call it right here at 111. I mean, 111 is going to be pretty key support too. Okay, so 111, 112.15. There you go. Let's go over to the cable. Okay, so here's the pound dollar. So the pound, obviously we pulled back from really key resistance yesterday. Didn't we write down resistance as 157? Somebody tell me. Did I don't know what the number was. What do we write down 157 as resistance? Yeah, okay, we did, Charles. Okay, so that's obviously very, very, very key. I'm going to actually highlight that as a 1.57. I'm going to put an asterisk by it because as long as 157 is holding, the risk is this. The risk is that we break this. Now, I'm not going to be happy about that because I'm long the pound New Zealand and I'm short the euro pound right now. So I really don't want the pound to break down, but it might. Because I'm net long cable right now. I have no short pound exposure, so I'm not going to be happy about this if we come down here. So if you think about by the time we get here, right? This is an hourly chart, so let me get rid of this for now. $50 retracement, trendline support. That's all going to come in at 155.72. That is not drawn correctly. 75. Okay, 155.75. We basically have to hold around here approximately because we are still in a bullish trend. We're still in a bullish trend, but I'll give you the buts. But if we come breaking below, well, you know what? I'm actually going to take it lower than that. I'm going to call it 155.50. I'm sorry, I got to make an adjustment here. That's going to be really key support. Okay? Really key support. Oh, wow, look at the euro. Dive! Euro dive! Go! Schwabel said to raise possibility of Greek parallel currency. Whoa! Remember? Do you remember who? Do you remember who said that? Do you guys recall who said that? My buddy Steve V. Right? Steve Volge. He came on the Morning Edge from Athens, and he said, you know, the possibility of issuing a parallel currency like the drachma. Do you know how bad that's going to screw the Greek people? If you weren't listening that day when we had my economist friend Steve from Athens when he was on here, what was like a month ago or so. The problem is you got people in Greece that let's say they issue the drachma. They stay in the eurozone. They issue the drachma to local Greeks. Okay, so if you're in Greece, you can use the drachma, and you're a state pension, government issues drachmas. You're a state employee, you get paid in drachmas. You work for work your pension payments are in drachmas. You get checks are in drachmas, and you're like, well, I don't want a drachma. I want a euro. The euro, because the euro is going to get me more buying power when I go outside of Greece. I don't want to be paid in drachmas. So you take your drachmas and you go, okay, but that's you can buy things like bread or gas or clothing. Most retailers are going to take either drachmas or euros. But what they'll say is they'll say, okay, you know, to buy that shirt, it's 10 euros, but in drachmas you're going to have to pay me 15 because I really don't want drachmas. I mean, I'll take them, but I don't want them. And then the other retailer down the street says, well, for instead of 10 euros or instead of 15 drachmas, this is gonna, I don't even want to take 15 drachmas. I want to take 20. So now you got inflation that's rising just for the Greeks. It could really screw them bad. I mean, bad. So I feel bad because I know so many Greeks. Obviously my wife's family is Greek, and it's not a good situation. Um, okay. Anyway, well, there goes the euro, and my euro pound is working out a little bit better. Wow. Okay. Um, let's go over to the Swissy. All right. The Swissy just ripped higher. Remember, these are our levels we're dealing with. See these red lines right here? Not this one. I mean that's important, but not right at this very moment. Right, we're kind of boxed in here, like we said yesterday, and perfectly uh, boxed in actually, aren't we? I mean, yeah, we overshot it by maybe 10 pips, but really 94, 93. And I'm so disenchanted with the dollar Swiss right now because something crazy happens in Greece, that Swiss can turn around on you so fast. It really can. So not willing to deal with it. Dollar yen. So Japan, the BOJ last night, they raised their assessment of Japan. You know what that suggests? What does that mean? If Japan raised economic assessment, BOJ raised the economic assessment of Japan, what does that mean? Translate. Right, Daryl. Daryl says no more, no easing. Hamid says no more QE. Amanda says no more QE. Nitish says no more QE. So what that did overnight is it firmed the yen. So the dollar yen came down. I think this is also one of the reasons why the dollar came down, is just because people look at the dollar yen and say, oh, it's the dollar yen, but really I think it was more the yen than anything. Um, Amanda says, so why is it still up? Well, I don't know. I think it probably has more to do with risk appetite, but let me put it to you guys this way. I'm looking for reasons to buy the yen now. I am, and I haven't been in these yen pairs for a while. For the last couple two weeks or so, I'm thinking about shorting some yen pairs. I haven't done so already. I doubt I'm going to do it over the weekend. On a Friday over a long weekend. I doubt I'm going to do that. But I'm thinking about it. I mean, I'm thinking about like early next week. You know. So anyway. Okay, let's go to the dollar yen. Okay, so what are we dealing with here? Well, 121.50, 120.50, right? I mean, you guys know I'm almost as disenchanted I am with the Swissy I am with the yen. So I don't even want to. I really don't feel like doing anything with the yen at the moment. But I think, and I'm just thinking out loud here, if we do get a rally back to 121.50, let's just say, and let's map out the scenario. Let's say the inflation data out of the U.S. comes in a little hotter than expected. Let's just say it does. And if it does, what you're going to see is you're going to see a spike up in the dollar yen, but I might actually sell that spike. Okay, so if the dollar yen goes from 121 to 121.50, I would actually sell it just because knowing that if the dollar spiked up and the dollar yen spiked up, stocks might actually come down if inflation data goes up. And so that move higher in the dollar yen would be very temporary. So, I, I don't I don't think playing it right now makes a whole lot of sense. But whoops, um, shorting it at 121.50 might be a decent trade. But I'm not doing anything with it right now. It's mid range. I mean, right? Mid range between here and here. Okay, let's go to the Canadian. So the Canadian, we have retail sales and inflation data out today, out of Canada. We have our own flag developing here, right? We have our own flag in the dollar Canadian. So that means support, really key right here. Resistance is right there. 122.55, 121.60. Oops. One 22.55. We are in a range. Kiwi. Like I said, I shorted the Kiwi yesterday. I um I was pretty happy to do so. Up there, well, I was at the red light. I can't believe it. I had people honking at me, and I was like, what? Looked up, and I was one of those people that were on the phone at a red light, which I shouldn't be anyway. And yeah, my kids are slurping ices in the back of the truck yesterday, and yeah. Anyway, um, that's a 38% retracement. 74 cents will be support. 73 cents is resistance. Or excuse me, is 74 cents is resistance. 73 cents is support. We broke this down sloping trend line. Just as important on the way down too will be this. Damn it. So, if we get a dip down here, we'll probably get a bounce off of 73 cents. I really can't see 73 cents breaking today. If it does, it's going to be very, very problematic for bulls, but that is major support. We were still in a range. We were getting close to breaking yesterday, but let's do the Aussie really quick, and then we'll take a little bit of a break. So here's the Aussie dollar. So the Aussie, um, as Sean pointed out, that copper is in the bear flag. Aussie is too. I mean, there are flags everywhere. The euro, the Canadian, the Aussie. There's just flags setting up everywhere. Um, but watch the Aussie dollar here because, as you guys know, this megaphone pattern, we start breaking through here, and it's just what's interesting is we broke this trend line right here. Okay, we broke this trend line here, and we have really not been able to muster any type of dollar and any type of uh, um, the dollar weakness that's come through the market has not translated it at all in the Aussie at all. Shows you how really bearish the Aussie is. So if the Aussie cracks through this whatever the low is here, 78.60, it's toast. I mean, resistance is going to be whatever the highs are here, 79.30. We're in a range, but really setting up for a possible fall. All right, when we come back, we'll do the dollar index, and I'll be back in a few moments. Don't go anywhere.